What's going on, guys? It's Jimmy here, and we got another good jobs report, but that actually might mean bad news here. Yeah, and I'll give you that here. Here's what President Biden had to say. Take a listen to this, and then I'll explain why it could mean bad news for Americans. Take a listen here.
I think we got a good jobs report. I'm happy to report that our economy has created over 300,000 new jobs last month. And that's on top of 500,000 jobs we added the month before. All told, we've created more than 12,000 jobs since I took office, nearly 8,000 of the manufacturing jobs. That means overall, we've created more jobs in 2 years than any administration has created in the first 4 years. And I think all this matters. It's no accident. It means our economic plan is working. And when I took office, the recovery and the economy there was no recovery and the economy was reeling. And 18 million people were unemployed on unemployment insurance compared to less than 2 million today. Unemployment was 6.3%, and nonpartisan Congressional Budget Office predicted it wouldn't get below 4% until 2026. Because of our economic plan, unemployment has been below 4% for 14 straight months since January 2022. Last month, the unemployment rate remained near the lowest level in 50 years. And that's really good news. People who are staying out of the job market, this is particularly good news, are now getting back into the job market. They're coming off the sidelines. They're getting back into the job market. The share of working age folks who are in the labor force is higher than it's been any time since 2008. That was one of the big predictors everybody was looking at. Tomorrow, it'll be 2 years since I signed the American Rescue Plan into law. It led to the fastest recovery of any major economy in the world. It laid the foundation for the progress we've been seeing and we see today.
Well, President Biden says this is good news. Well, is it? So yeah, unemployment is at, I think it's a 53-year low, 53 or 54-year low. The problem is that a lot of Americans have gone back to work because of how high inflation is and how long inflation has been high. A lot of people have had to come out of retirement to get jobs, and a lot of people have had to get 2 jobs. And the other problem here is, and I'll show you the headline here, job growth spikes push Federal Reserve, towards more aggressive interest rate hikes. Yeah, good old Jerome Powell, the head of the Federal Reserve, is going to be looking at us with the stink eye, saying, yeah, because the problem is when the economy speeds up and more people going to work, it's actually a negative for the Fed. Here's a quote for you. Quote, if the market was looking for a clear data point that would allow the Fed to ease back interest rate hikes towards only a 25 basis point hike at its upcoming meeting, today's report was not it. Morning Consult economist analyst Jesse Wheeler said. The U.S. economy added 311,000 jobs in February, far exceeding expectations. So this could possibly mean that the Feds will kick up the interest rate hikes even more. And it's just like every time we look and see that the Fed might slow down the interest rate hikes, the data just kicks us like a mule. And it just seems like they're not going to stop here. In fact, a lot of people think that the Fed's decisions are misguided. We've seen Senator Elizabeth Warren, just completely mule kick Federal Reserve Chairman Jerome Powell. If you watch that video where she just literally grilled, she said that, I'll link you to that video here at the end of this. She said, Jerome Powell, what are you going to say to these millions of people who are going to lose their job directly because of you and your decisions? That was such a good kind of back and forth interview from there. Here's what Wharton Business School professor, who's kind of come to be one of the experts on this, says about the Fed's decisions here. Take a listen to this.
Jeremy Siegel's here, professor emeritus of finance at University of Pennsylvania's Wharton School of Business. I'll just ask you the question I was asking Steve. What's your expectation? Are you at a 50-50 or 25 for next week?
Well, first let me say that I think that the Fed policy is very misguided. Let me tell you why. This month is the third anniversary of the COVID crisis, March 2020. Over that period, wages have gone up less than inflation. It's hard to argue the wages are cause of inflation when they've gone up less than inflation. By the way, through history, wages usually go up 1 to 2% a year above inflation. So workers are way behind where they normally are over the last 3 years. But more importantly, Jay Powell himself has said there's a structural shift downward in the labor supply. Well, listen, Economics 101 says if there's a reduction in supply, we have to increase the real wage to clear the market. I mean, it is not the job of the Fed to offset a supply side shift. They control aggregate demand. So I think they're focused just on how tight is the labor market. Suddenly, a maniacal type of a focus is the wrong way to go about it.
Right.
Look what's happening to prices.
There's two issues. There's what you want the Fed to do versus the question I'd be asking, which is what you think the Fed will do. And it sounds like you think the Fed will go 50 points, and maybe you're scared that they will, and that's why you're saying, and you think that that's the wrong decision?
I definitely think that is the wrong decision. I mean, I agree with, I basically agree with what Steve said. If it's north of 200, now don't forget, we're going to have to look at the wage, and there is that CPI, which we've stressed is such a terribly backward-looking index. That now he's excluded rent, as well as food, as well as energy. The so-called mini core that he's gotten to now is 20% of GDP that he's actually looking at. Look at the on-the-ground inflation indicator. Commodity prices are making new lows across the board. Freight, shipping prices making new lows. Look what's happening. What's going to happen to the housing market? Do you know that mortgage rates back to almost 7.25%, almost 100 basis point increase in 6 weeks. Right. What do you? The Case-Shiller housing index down 6 months in a row. I mean, is he looking at those? None of those are in the CPI index, not yet, and won't be for 3, 4, 5 months.
Yeah. So is the Fed misguided? I personally think so. I think that everything that they've done to raise interest rates, it is a tried and proven strategy, but I think that they've already done it enough. I think they've already raised interest rates 8 times in the span of, I think it's like 12 months or so. They've already, anything that is interest rate sensitive, like buying homes, buying cars, things like that, that's already feeling the pinch. Okay. The thing is if they raise interest rates anymore, it's just hurting the low and low income Americans even more, people with credit card debt and things like that, because it raises your interest rates. Okay. Anything interest rate sensitive is already feeling the pinch. If they raise interest rates even more, it's just going to hurt low and middle income Americans even more. And this is the problem here. We've already seen car prices come down, but interest rates go up. We've already seen home prices come down, but interest rates go up. If they keep pounding this and pounding this and pounding this, for example, is if they raise interest rates even more, is it going to make your landlord go and lower your rent? Is it going to make your electricity go and lower your electricity? Is it going to make the price of strawberries go down? Is it going to make the price of gas go down? Is it going to make the price of bananas go down, or the price of potatoes or rice go down? The answer is no, because your landlord is not going to go and lower rent because he's raising interest rates. So the thing is that when he raises interest rates, it can only affect the things that are interest rate sensitive. Okay? And you get what I'm saying here. I'm speaking broadly here, right? If anything, somebody that goes to buy a new home and these interest rates are so high, if they want to become a landlord, they might have to say, "Oh, my interest rate's so high, I have to raise the rent if they want to rent it out." And yeah, the price may have come down a little bit from when they bought it. Maybe they got a little bit of a price reduction, but the interest rate was so high, it may have even cost them more because of that check and balance. Yeah, the price of the home came down a little bit, but the interest rate was so much higher that it didn't negate what they paid. They actually ended up paying more payment wise. And this is one of the problems. This is why a lot of people aren't even thinking about selling their homes anymore, because they might have a 2.9% interest rate, a 3% interest rate. And if they sell now, they're going to be near a 7% interest rate. And it's just not, it's like nobody wants to sell their home unless they absolutely are in a dire need to. They have to move across the country or for whatever reason, right? So, yeah, and it's just like the Fed's just going to keep pounding and pounding interest rate, and all it's going to do is send us into this massive recession. And if you watch my previous video, we're seeing banks collapse now, and again, it's going to cause more interest to the government that's already spending $1 trillion a year in interest. It's going to cause more money and interest for the government and everybody else, all the regular Americans, and it's just going to cause more financial pain for everybody. So let me know your thoughts here in the comments. I'll keep you up to date here on everything. If you appreciate these videos and the information, don't forget to hit the like button for us. And if you haven't yet, make sure to click the subscribe button and then the bell icon so you don't miss out on new videos to come out here every day on our YouTube channel. Here's some videos that you should watch next. Here's the video about the bank collapse, and really good information there. It's crazy. Here is the video I just did about the origins of the virus and classified documents of it being declassified. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.